Hello, Alan Knuckman from the CME Group in Chicago, talking equities. Stocks slipped today to end the trading week with the holiday weekend ahead of us. So we had the S&P down 0.5%, the NDX down 1/3%, and the Dow down 0.5% to end the week. It was a bombs away day. Two separate factors impacting the market. Number one, President Trump had said that the dollar is strong, and that gives everybody a spook. It's an unspoken policy that all presidents are supposed to talk up the dollar, not down, and that could be viewed as a negative. So stocks slid. Also, we saw some acceleration to the downside today when it was announced that a bunker bombing bomb dropped through in Afghanistan. And the mother of all bombs, the biggest non-nuclear weapon in the arsenal. And that is, again, a back-to-back bombing mission that has the markets a little bit concerned about the geopolitical situation around the world and what could happen. Could things escalate from here over the weekend and into the future? More importantly, from a technical standpoint, support was slammed. Stocks had been trading sideways. Now let's look at a couple examples here. The Dow Jones have been trading sideways between 20,500 and 20,750 for the last couple weeks. So when we penetrated that 20,500 level on the downside, it was lookout below. If you look at the S&P last week tried to get above the halfway point of the recent action from the March 1st highs to the lows here from the 27th. But when it couldn't do so, we've seen some technical selling and some follow through. So if you look at it, we were down 1% in the S&P on a weekly basis and down about 0.75% in the Dow. Not a whole lot, but feels a little bit heavier with all of these items in the news. The Nasdaq, on the other hand, made new all-time forever highs just a week ago Wednesday, so it has not been that long. And it had a key reversal last week with those new highs and a lower weekly close. This week we're down another 1%, continuing that reversal top that we've seen. Now on the good news, earnings started today. The earnings season unofficially kicked off with the big banks coming out with booming earnings numbers. $15 billion in profit between Wells Fargo, Citigroup, and JP Morgan. So they are banking it. Now that starts to set the tone for the quarter because we've been in a lull here for the last couple of weeks with a lack of fundamental information to drive this market and really moving based upon policy and punditry. Now we're going to focus on what corporations are doing and how much money they're making. The expectations for this quarter are 9% earnings growth. So that's a significantly solid number that should be supportive of stocks. So to summarize, ahead of this holiday weekend, we saw stocks sell off one more time, closing on their lows. But let's put this in perspective. The year to date, we've got the Dow up 3.5%, the S&P up 4%, and the Nasdaq 100 still up 10% after this sell-off. Alan Knuckman here in Chicago, focusing on equities.